Let's turn to business news now with Nona Peltier. On all week, Nona, is that right?
Oh yes, it's my turn this week.
Excellent. Well, we're delighted to have you. Let's begin with Australian investment company Alliston Capital taking a 5% stake in Fletcher Building. Why? What do they want?
We heard this last week about Wesfarmers, that perhaps they were taking a stake into Fletcher Building because the company's been looking cheap with all of its problems with the building interiors division. And then today we got a notice from the market that no, it's another company, and this organization is a fund manager, manages funds on behalf of government, super funds, larger institutional type of investment schemes. Whether or not they're representing Wesfarmers is a bit of a mystery. At this stage, we don't know that. They only have to disclose that they have 5% of the company. They've been buying shares in Fletcher Building since the end of last year, and they've now got up to 5% as of Friday. So yeah, and as a result of that...
In monetary terms, do you know the answer to this question? It's really mean to ask you this question. How much have they spent? Do you know all that?
Well, it would have been, I guess, an average of the price from the end of last year to now. And as a matter of fact, Fletcher Building's share price fell 1%. So let's see. Actually, it's funny that you asked me this because I checked it out just before. Right. So at the beginning of this month, the share price was $5.74. As of today, it was $6.27. But that's down from where it was on Friday, and that's because Wesfarmers would have been seen as a perhaps takeover party, whereas this is just a fund manager investing at this stage.
It's a trading position. Who knows whether it's long-term or short-term?
Exactly. And they are opportunists. So in this case, the share price fell about 1% to that level. And at the best it's been in the past year was $8.78, and that was in May last year. So yeah, overall the share price has been pretty low.
That keeps on giving the Fletcher Building story, isn't it? Amazing.
Really? Well, you'd expect that to go on for some time, I'd say.
Right. A second consecutive bad harvest is going to savage the profits of honey and oils company Comvita. What's the damage there, Nona?
It's actually substantial. The company is expecting to make between 8 and 11 million, and that's against a previous forecast of 17 million. Now, I did some checking last year. The company made, I guess just $15 million. Well, rather, 15 million. But that was actually in respect of mostly a gain from the sale of one of their businesses. So the company's been struggling for a while, and it's pretty much it's bad weather. But interestingly, because they had to give a warning on their forecast, they also had to disclose that there's another company sniffing around, looking at maybe a takeover offer for Comvita, another company that's looking cheap. So it's had a really tough time, and it's starting to show on their share price.
Right. What the markets do today?
So Comvita's share price strangely rose because of the potential takeover. So it was up 0.5%. Fletcher Building, I already mentioned, was down. Sparks, now I thought you might be interested in this because of the rugby talk. So Sky TV shares rose nearly 2% today. Crazy, huh? And Sparks rose more than 1%. Will remain to be seen. What the market is a fickle beast at times.
It is.
And so overall, our index is down 8 points, and that's mostly because of Asia and the sentiment that's really confused over what's happening with Syria and all the other stuff that keeps coming out of the U.S. Dollar's trading it's steady. That 73.5 US cents, pretty high. 94.6 Australian and 51.6 pence.
Nona Peltier, thank you very much indeed. Nona mentioned Syria. We'll have the latest from there shortly.